Robinhood launched in 2015 with a bold mission to democratize finance for all. No trading fees, no account minimums, just a sleek, mobile-first app that made investing as easy as ordering takeout. And it worked. Robinhood didn't just break the mold, it shattered it. Within just a few years, millions of users had signed up. By 2019, the app had 6 million accounts, and by 2020, it had more than doubled to 13 million. And by the time it went public in 2021, Robinhood had over 22 million funded accounts and was valued at a staggering $85 billion. It forced the entire brokerage industry to react. In 2019, giants like Charles Schwab, TD Ameritrade, and E-Trade eliminated trading commissions entirely, something unthinkable just a few years before. Robinhood had officially changed the game, and it wasn't just how it worked, it was who it was for. The median Robinhood user was just 31 years old. Nearly half were first-time investors. For an entire generation, Robinhood was the stock market. It was fast, fun, and it felt empowering. You could buy Apple or Tesla in seconds. You could jump into crypto, ride meme stocks, chase trends, and it felt like investing had finally caught up with the times. But here's the thing, when investing starts to feel like a game, people don't always make smart decisions. And when you strip away the barriers that once forced people to slow down and think, things can get risky fast. Robinhood promised to democratize finance, but in making it too easy, too fun, too addictive, it may have created a platform that encourages gambling more than it fosters wealth. Robinhood is built to feel good. It's smooth, it's colorful, and when you buy a stock, the app used to launch a burst of confetti, like you just hit a jackpot. But here's the thing, buying a stock isn't supposed to feel like winning a prize. It's a financial decision, not a slot machine. And yet, Robinhood makes it feel like a game. That's not just a stylistic choice, it's behavioral engineering. Just like Facebook uses notifications to keep you scrolling, and casinos use flashing lights and sounds to keep you spinning, Robinhood is designed to keep you tapping. It's not a coincidence, it's psychology. These features are carefully tested and optimized by teams of designers and data scientists to make the experience feel fast, rewarding, and maybe even a little too addictive. In fact, Robinhood's head of design once said that their goal was to make investing as intuitive as using social media. While social media might steal your time and productivity, Robinhood can end up stealing your money through impulsive trades. And when the losses starts piling up, it doesn't just hurt your wallet, it can take a real toll on your mental health. Both platforms can affect you negatively in the long run, just in different currencies. One takes your time, and the other takes your financial well-being. Studies from MIT and Stanford have found that Robinhood users trade more frequently and take on more risk than investors using traditional brokerages, and they tend to underperform as a result. It's not because these users are less capable, it's because they're being nudged into behavior that feels fun in the moment, but costs them in the long run. This isn't just investing, it's engineered speculation, dressed up in the language of empowerment. A big part of that engineering is how the app removes friction. On most traditional platforms, placing a trade, especially something risky like options, involves multiple steps and confirmations. Robinhood strips that away. With just one tap, your trade is in. No second guessing, no warning on screens. That kind of speed makes it easier to act on emotions, not strategy. Then there's the environment that it creates. The app constantly highlights trending stocks, daily movers, and what's hot right now, encouraging you to chase momentum rather than building a long-term conviction. It's the investing's version of doom scrolling, addictive, reactive, and rarely rewarding in the end. And perhaps most dangerous is how options trading is presented to you. Robinhood shows you simplified visuals of potential gains and losses, sometimes looking more like a scratch-off lottery ticket than a serious financial tool. It emphasizes the jackpot potential while glossing over the complexity and risk. When you combine instant access, flashy cues, and simplified risk visuals, you don't get a platform for building wealth. You get a dopamine machine that rewards short-term bets. It's not designed to help you think long-term. It's designed to keep you coming back, and that's especially concerning when you consider who's using Robinhood. As of 2021, the median age of Robinhood users was just 31, and nearly half of all users were first-time investors. For millions of people, Robinhood wasn't just a new app, it was their first experience with the stock market. And that matters because your first interaction with investing often shapes your mindset for years. If your introduction to the market teaches you to chase trends, trade frequently, and treat investing like a game, you're far less likely to develop the habits that actually build long-term wealth, like diversification, patience, and consistent saving. According to a study published by the National Bureau of Economic Research, new investors who entered the market during the COVID boom, many through Robinhood, tended to exhibit higher trading frequencies and worse portfolio performance than more seasoned investors. In short, they traded more and earned less, and the consequences are real. It's not just about losing money, it's about missing out on the compounding power of investing done right. When you're constantly pulled into short-term bets, you lose the bigger picture, the one that actually builds wealth over time. The first part of that bigger picture is identifying great companies, businesses you truly understand and believe in, and having the discipline to hold them for long term. That means ignoring the noise, riding out the volatility, and trusting your conviction over time. The second is even simpler. Don't just buy one single stock, instead buy an entire asset class through an index funds. Automate your contributions and let compound interest do the heavy lifting. No fancy trades, no market timing, just consistent investing in the broader economy. Robinhood doesn't encourage either of these paths. Instead, it rewards speed, emotions, and constant activity, which, ironically, are the enemies of long-term wealth. And for millions of people, this app is their introduction to investing. That's the problem. Investing should feel calm, it should feel slow, and most of the time, it should feel boring, because that's how real wealth is built. Robinhood made investing feel exciting, but maybe, just maybe, that's exactly what makes it dangerous. Thanks for watching. Stay smart, stay patient, and remember, real wealth doesn't come from clicks, it comes from consistency. My name is Luke, and I hope to see you here next time. Have a good one.